Good morning from the Washington area or afternoon, as one of our panelists is currently in Brussels. And welcome to today's webinar. We are going to be talking about Chinese lending to the global south, whether that's a boon for development or a gateway for debt collection. I am Eleanor Albert, a research fellow with the Initiative on US-China Dialogue on Global Issues here at Georgetown. Today's event is part of a wider event series on different facets of China's relationship to the Global South, and it is co-sponsored by the initiative that I am a part of, as well as the Africa-China Initiative. So about more than a decade ago, there was a big announcement with the Belt and Road Initiative, and that really splashed China onto the scene as being a major lender for overseas lending. Our panel of experts is going to explore a range of industries in which China continues to invest, the preferred vehicles for lending, as well as similarities and differences across different Global South regions. Now, without further ado, I want to give a brief introduction to our speakers today. Christian Geronima is the Africa editor of the China Global South Project and a non-resident scholar in the Carnegie Africa program. We also have Rebecca Ray, who is a senior academic researcher at Boston University's Global Development Policy Center, where she leads the Forests, Agriculture, and Indigenous Rights in the Belt and Road Initiative, as well as research on China and Latin America. And last but certainly not least, we have Sheng Zhang, who is a leading research analyst at the Chinese Development Finance Program at Aid Data. He specializes in development finance, infrastructure projects, and environmental, social, and governance research. So the four of us are going to have a discussion for about an hour before opening up to questions from the audience. And when you do have questions, please submit them with the Q&A function at the bottom of your screen. But to kick us off, we're going to start speaking with Shen Zhang. Going to ask a few questions, take whatever smattering you want of them. But first and foremost, how has China's lending to the global south shifted or rebounded since the COVID pandemic? Have the industries in which China is investing in which the industries that China is investing in the developing world shifted or changed at all? What are the primary vehicles for this lending? And then how have China's own economic challenges, which have been much more discussed openly, um, led to a reassessment of some of this outward lending and investment strategy? So over to you, Shenjiang.
Thank you for having me today. It's both an honor and a personal passion to discuss China's role in the development finance world. As a research analyst at AData, I have I guess, a deep appreciation for data and data points. So consider this as a friendly disclaimer, just in case my answers are leaning too nerdy on numbers and trends. So first of all, I think it's essential to contextualize China's role in global development finance world by sort of benchmarking it against like other major donors. According to OECD data and Data's global Chinese development finance dataset, during the Belt and Road era between 2014 to 2021, China has roughly committed approximately over like 680 billion US dollars, which is about twice of the amount that United States have committed, and which is a leading donor already among all the G7 countries. So this underscores China's significance as a lender of all to the developing world. And if we were to looking this on a horizontal kind of way from the time axis, then we are working the path through something between like early 2000 all the way to now 2024. It's like 24, 25 years. At A Data, we're working on currently on the 2022 sort of commitment year data collection cycle. Even though I won't be able to share like specific unpublished data points, I could still comment or highlight some observable trends that I've seen so far on those newer commitment years. So during the BRI kind of period, China's annual commitment averaged roughly at 85 billion per year, which is a huge amount. COVID-19 undeniable sort of impact Chinese lending as development finance dipping down to some sort of around like 80 billion roughly by 2021. Well, early 2022 number estimates suggest the commitment may still surpass 60 billion roughly. but this number would probably fall short of levels that we've seen in the past few years. Now, if we were to shift gears, looking at industries, as Eleanor mentioned, the composition of China's, global development finance program that has evolved sort of over the time. Before BRI was even announced, during the early 2000s, between something 2000 all the way up to 2012 or 2013, the Chinese loan finance has focused heavily on hardware sectors. For example, like industry, mining and constructions, energy, transportation and storage, and communications. Oh, and by the way, I'm using those sector names or industry names categorizations from OECD here, just for like a fair comparison. Um, with the onset of the BRI period, where there are sort of the soft money sectors, including like banking, financial services, general budget support, and all of that begin to take like a larger and larger share over the time. By the late BRI period, sort of post 2017, those subsectors are stabilized among the top five rankings, alongside the traditional hardware sectors, including, what I mentioned earlier, industry, mining, energy, and transportations, which infrastructures are mostly like heavily involved. And this trend persisted through the pandemic years. I was trying to breaking things down in the sort of the post or late BRI period, from anything like 2017 ongoing, and having like a cutting off point of sort of 2019 and 2020, just as COVID hit. So breaking things of late BRI before COVID and late BRI sort of during COVID period, I do see similar trend of, sort of the soft sectors are stabilizing among crowded up in the top five sectors, alongside with the traditional, infrastructure heavy sectors. So that's sort of something I think, shifted over the years, especially in the late BRI period. And if we were to again shift gears, I know there are different ways of looking into Chinese lending, development finance over the time. If we were to look at the financial instruments, I do see like a shift from infrastructure lendings, which let's just define it as loans that tie to specific investment projects involved constructions and other work on physical infrastructure. That is shifting more towards to the emergency lendings and rescue lendings. And the latter part includes the loans for, servicing existing debts, financing for general budget expenditures, and or shore up foreign reserves. Um, from a data point perspective, the infrastructure lending in the early 2000s accounted for roughly over 60% of the whole kind of lending portfolio. And that number dropped to nearly like 31% by 2021. And with the newer data suggests that it could be even less than that in 2022 and ongoing years. And meanwhile, the emergency lending, rescue lending climbed from something like 30% in the early 2000s and all the way to 58% by 2021. And again, newer data may suggest that it's probably going to surpass 60% in 2022 and ongoing years. So if we were to look at the pool of the loans that I just mentioned, and just for a disclaimer, here is the loans that at data we track are from official entities, including the Chinese state-owned policy banks, state-owned commercial banks, government agencies, et cetera, with the whole pool of the loans. They're roughly like 60% now as of 2024 are in the repayment period. So we do have those information about the loan terms, loan details, and we did a calculation. For the same pool, roughly nearly half of the pool, like 50%, half of the loan have reached their originally scheduled final repayment as of this year. So this aligns with the broader global economic pressure post-COVID and also faced by China's own domestically economic challenges. So that has led to the reassessment of the overseas lending strategy. So it's a mixture of forces which sort of pushing the strategy, the policy in a more complicated directions. So to face those challenges, to mitigate those risks, there are many efforts has been taken. Just as a few examples here, first, we do see that the credit enhanced lending become more and more common. So basically, our lendings backed by credit enhancements, including insurance, mostly purchased from Sinosure, collateral taken on several projects, and also the loan guarantee. If we were to take a calculation on how much of the loan that at least been backed on one of the three credit enhancement, that number in early 2000 as a ratio was about 25 to 30%, and now that number has easily reached over 60% in the late BRI period. So it's a huge jump, nearly double, if not triple the size. So that's one of the things shifted over the years. And also, if we were to looking on the type of the loans or the behaviors of the lending, then more and more loans are now involved with co-financing or loan syndication arrangement instead of just bilateral lending. And many of the co-financing and loan syndication are now involved with multilateral organizations, Western financial institutions. I think this represents a notable shift in China's approach to the global lending, which diversify and trying to mitigate the financial risks, no matter it's domestically or at the global level, caused by many complicated issues. So, well, there are still kind of a lot that I could say about different examples and things to cover, but I'll pause here to allow other panelists to contribute, but I do look forward to diving deeper into these topics during the discussion.
Great. Thank you so much. I have a few follow-up questions before we turn to Christian, but I wanted to ask kind of two things. Um, One is you finished kind of on this idea of shifting the types of loans and the partners of the loans. So I was wondering if you could talk a little bit about, what explains the shift in lending instruments. Is it purely a financial calculus? China itself has for a long time developed with a large amount of debt that it has lived with. And is this a reassessment given its own domestic concerns, or is it also because so many of these loans, have had to be reassessed, or arrangements made anew to figure out ways to repay them? So that's kind of the first question, and I'll let you take that. And thinking also about having Western financial institutions be a part of this. What is the thinking behind that? Is it purely a risk mitigation factor, or are there other strategic thinking behind that?
Yeah, this is a great question. I think this is a combination of policy assessment over the time in facing of the financial risks and also taking consideration into the recipient country's reality. We do see like a growing trend of the financial distress in the global south, and also a lot of countries are facing with uh, distress and an issue with repaying all the debts. So as of like a common way to diversify the source of financing and diversify the risks among different lenders, doing like co-financing and loan syndication is absolutely like helping with the lending issues here. I think it's a gradual trend as for which, I did a chart earlier to suggest that it's not like all of a sudden shifting ever since COVID, but it's like a gradual trend over the year to have the loan syndication and co-financing taking larger and larger shares. So I think it's probably a mixture of what has been, outside of the world and also inside of China. It's a mixture of combination to shifting this change. In terms of like from like a learning instruments kind of perspective, I think it's also like a better idea, because if you are dealing with the loan syndication, let's say with multilateral organizations, Western commercial banks, then you're also choosing to adopting the same standard, including the ESG standard and the ESG safeguard among the whole kind of loan syndication. So you could see that on the contract side and also on the project implementing side, those probably better standard are being adopted also over the years. So I think it's like a win-win situation if considering about diversifying the risk and also kind of adopting better safeguarding standard for ESG complements.
Great. Thank you so much. We're going to turn now to Christian Geronima to talk a little bit about the regional implications, starting first with looking at China's lending practices to Africa. So to frame kind of questions for you, who are China's primary partners and recipients of Chinese lending on the African continent? Has this changed at all over time? How are these projects viewed by local and recipient communities, which is not necessarily always the same thing as the parties making the agreements with these loans? And then, to get to kind of some of the questions of the title of this webinar, is the debt trap narrative a valid one when it comes to thinking about Chinese loans to Africa? Of course, this could be a mixed picture response, and there might be some validity, but it doesn't necessarily assign any blame necessarily, but things to think about in terms of the increased levels of economic distress that are taking place. So over to you, Christian.
Eleanor, thank you for having me. It's going to be really impressive to talk before Rebecca and talking after Ray, after Shenzhen on this issue. But it's really something that I'd like to give some highlights so people can see, understand how China's lending approach has been changing over the years in Africa. So when you look at what China's practice in terms of lending in Africa, we know that countries like Angola have been the biggest recipient of China's loan over the years. It's cumulated to 45 billion few years back. I think if for the last number that we do have, it's now around $18 billion today that Angola still has in terms of loans to China. I think I've lost you for a moment.
All good on our end.
Yes, okay, good on your end. So I think for a moment I thought that I've lost you there. So yes, as I was saying, that Angola has been the main recipient of China's loan over the years, 45 billion, accumulated 45 billion. It was under that premises of infrastructure for natural resources, and today Angola has been able to repay those loans to now it's cumulated to 18 billion. And we also see countries like Zambia, Ethiopia, who already also got the loan from Chinese financier. In terms of an instrument, I think that Shenzhen have mentioned that, but the main instrument were policy banking like China Exim Bank and the CBD, who really drove Chinese lending South Africa, and with a focus onto energy sectors, transport, and ICT over the years. Energy sector have been really the main recipient of Chinese loan over the years on the continent. Really, a lot of investment has been done in fossil fuel, and we also investment in hydropower and in different parts of the energy portfolio on the continent. I do believe that Boston University released a data where it was showing that how fossil fuel investment have been a larger part of recipient of Chinese loan, CBD and China Exim Bank portfolio on the continent, representing roughly around, I think, 20% in general of Chinese lending on the continent. So when we look at that, we see now there is a shift, of course, that Shenzhen mentioned before. There's a shift that we also see in Africa, how Africa have been receiving less and less than Chinese money, to the point that in 2022, get like less than $1 billion. It was like quite a surprise, and we got a jump back in last year where we got to 4.3 billion, if I remember correctly. But when you look at the 4 billion of last year, we saw a lot of lending extended to financing institutions on the continent, being I think China, being Africa Development Bank and Egypt Bank in Egypt and everywhere. So we saw a lot of that happening as well. In 2022, there was a kind of shift as well where we saw environment project being, receiving a lot of loan in 2022. We were expecting that being part of the small and beautiful, where we're going to see a lot of green investment coming. We're still gonna have to see that happen, but we saw that happening in 2022. In 2023, it was back to energy and also back to financing institutions. So in terms of how those loans have been perceived by African countries, it's really interesting, because that debate has been part of how all China's Chinese lending in Africa has been framed. And this is the part where I think it's really important, where the way we frame that questions. When it comes to Africa, it's really surprising if they want to highlight China's weight into Africa's debt, they will tend to use bilateral element, but tend to say China represents X% of countries' bilateral debt. They will say that China represents that X% of Africa bilateral debt, without really putting in perspective what the bilateral debt represent in the whole stock of a specific country in public debt, in what represent in whole stock of Africa public debt in general. So when you focus on that, you'll be like, yeah, you know what? China is a big problem. But when you say, take a look, take a pause and look back, and can you break it down to show me where bilateral debt stand, you're going to realize that, no, it's not really what you tend to portray you tend to portray and to show. And this is the part where, because of that framing, when you go to Africa, you have that debate, people saying we have a China problem. This is what the expert needs to come and say, no, we don't have a China problem in terms of public debt. We do have a financing management problem on our side, and China is just one of the problems. That our biggest problem will be multilateral banks, will be like bondholders, and lately people will tend to say, you know what, Zambia is the case. I say Zambia is not really the case, because Zambia did not default on its Chinese loan. Zambia defaulted on its loan to bondholders. That, and less, of course, crippled on all the debt that we saw. Those are the elements that we need to put on perspective when we cover that issue about China's debt and lending in Africa, that most of the time are not part of the debate. And this is the problem. Just to answer your question about about the debt trap narrative, it's because of that framing that when people talk about that, they would say debt trap narrative. Say, no, you don't have a debt trap narrative. If we do have a debt trap narrative, it's going to be China now has a problem with debt in Africa, because China finds itself into a huge amount of debt on the continent, where country cannot just reimburse, cannot pay back. And China would like those countries to pay back, but they just now in an ability to pay back. And China, because of everything, because it's portrayed itself to Africa, cannot come and say, you know what, I'm going to seize here and that. There's no seizing of land. There's no seizing of infrastructure. There's no kind of seizing happening on the continent. At the end, China just, as Zhang mentioned, you find China now starting to finance to less loan they got before. That just shows you how it's become a very tricky situation. And this is the part where it's get a bit difficult and tricky, difficult to understand, in the sense where people don't always realize that in the early 2000s, when China was really started to lend those money to Africa, that many officers sitting on CBD's desk, on China Exim Bank, were not well trained. They did not have the experience to assess the risk, to go into the details, to evaluate how much this country represents in terms of risk, in terms of opportunities. They were really not so qualified. Over the years, giving those loans, realizing how they become problematic, and also those officers and China Exim Bank expertise, people starting to learn, acquiring expertise, you find yourself that now gonna learn better. Now we know better how to approach those kind of situation. Now we know that we need to go slowly. Now we do know that if a country says, you know what, I have 3 trillion of natural resources, it's not just enough for me to go to say, you know, I'm going to give you 60 billion. I'm going to have to be careful. I'm going to be to look into how you're managing your financing. I'm going to be careful on how you look at your governance issues, because I don't want to implicate myself in your governance issue. I'm not finding a way to now to mitigate my risk. And now going to small projects, syndication loans, you know, because I want also to be backed, you know, to be protected against all the risk that you're presenting. And this is the part where in the narrative that we don't always cover, we don't always present, that people don't always understand how it's also difficult from Chinese lenders to really basically lending in Africa. That's why we see the shift that Zhang mentioned before on how they're doing it, the instrument. Now we see a lot of commercial banking. We see a lot of Chinese private institutions now being part of the debate, because the big banks are realizing, you know what, maybe we need many players part of that game to allow us to still being present on that space. I think those are the few comments I'm gonna make an entry, so we can have the debate to talk about how it's perceived and how people are reacting to that. And sorry for my internet. I'm quite surprised that here in Belgium the connection is so bad. If I was in Mauritius, I wouldn't have that problem. It's really surprising to me coming to Europe and having those kind of issues. Very
Oh,
sorry about that, guys.
no problem at all. Anytime you cut out, you came right back in. So I wanted to ask a few follow-up questions. So you presented this like big learning curve experience for China, as it cut its teeth and doing all of this lending. I was curious, you mentioned Angola as a major recipient. If you could name just a couple other countries, and are the is industry this is it really just the energy sector that's still so dominant in the natural resources? And then a second question, which is to contrast kind of the China story in Africa. Biden is wrapping up his visit, in fact, in Angola right now. The trip is being painted a little bit as part of a response to this long-standing Chinese economic influence. Is the US competitive on this front with China? There's been an attempt to publicly frame certain initiatives and efforts that the US is doing. But of course, there can be lots of critiques in the choice of timing during a lame duck period for a president to make a trip to Africa from the US. So kind of first talking about who China's major recipients are in Africa and the sectors, and then kind of contrasting it with the US experience.
So I think I'm gonna speak here with this under the advisement of Shenzhen and Rebecca. I think we have Angola, we have Nigeria, we have Ethiopia, we also have Zambia among the recipient of Chinese loan, the main recipient of Chinese loan in Africa. We also had a country like Congo Brazzaville as well, who somehow managed to get 2 times to get China to restructure its loan repayment for reasons sometimes that people don't always understand. This is the part where you get the element of, I wouldn't say personal, but the party-to-party relationship that's played in a way that Congo Brazzaville got is that restructured with in terms, not restructured, but in terms of postpone in terms of how to reimburse the loan in Africa. We also, in terms of sector, there was a lot of infrastructure element that really played into different countries, because China was seen as the one providing money for building infrastructure in many African countries. And this is one of the criticism that we've received about Chinese lending in Africa. And in the defense here, I'm going to be playing China's defense in the sense where many African governments did not really manage the loans in terms of like, let's invest in those infrastructure that makes sense, that will really boost the economy and really move it forward. A lot of those money have been used for, I would say, whitewashing and political purposes. People wanted to show, I'm gonna give a country like the DRC, the president would say, I want to build a big boulevard in Kinshasa, build big building and everything. Yes, it's nice because it brings you political, credit. You can say, I've done it, because people in the capital cities are more politicized. They can really see the impact. And when election comes, you're gonna say, I did this. But think in terms of economic impact, how it could change the economy, it was not the wisest choice to make. Those choices could have been built in a very remote places. They could have unlocked real potential, but just because they did not have enough media coverage, politicians did not want to use those kind of projects because it did not bring them the advantage of being able to use it as a political token for them. And this is one of the mistakes that many people have been pointing out to China, to say, you know what, you should have been more careful to, to tell people, you better use this money in that sector where instead of using in that place. But China would tell you, you know what, I'm not interfering in how people are managing their money. They asked me 2 billion, I'm going to give you 2 billion. The way you manage it, it's not my problem. As long as I'm going to get paid back, it's not my issue. So to get back to your second question, in terms of Angola, Joe Biden and everything, I don't want to be here people saying, I'm being mean to the US, but there is a lot of PR, a lot of communication around that, but very less substance. When people are saying, you know what, it's the starting point of US counterattack in China, say, have you measured China's impact and presence on the continent to come and say Lobito Benguela? And mind you, I'm just going to give you the point. Mind you, the Benguela Railway has been refurbished by Chinese money in 2013 for $1.8 billion. So it's like China has put money on that railway in certain extent. So when they say it's a very important, it's going to unlock certain opportunities for for Zambia, for the DRC. But compared to what China has done on the continent, it's really way far from to catch up or even to say that you are sitting on the same table in terms of competitions, in terms of impact, and in terms of what's going to produce. I don't want to get into the critical mineral part of it by saying that, you know what, it's just a railway. At the end, if there's no if there's no processing plant in the US and Europe, all those minerals will just go there and go down back and go back to China. It's just a railway. So far, it's just a railway, nothing more than that.
Great, thank you. We are going to shift away from the African continent and turn a bit towards Latin America and bring in Rebecca. So I wondered if you could shed some light on the specifics of China's role as a lender to Latin and South American countries. Again, where is China channeling the bulk of these loans? Has it been open to restructuring debt for countries? And on what terms? And then what impact, again, have these loans had to local economies, whether that's in the financial realm, environmental realm, otherwise, social impacts, et cetera. So over to you.
Well, thank you so much, Eleanor. It's such a pleasure to be in this group and get to share ideas with these scholars today. A lot of what I'll say echoes patterns that we've heard both globally and on the African context. And so I want to supplement that a bit with a broader view of the economic relations themselves. Because not only has Chinese lending to Latin America and the Caribbean not been a gateway to debt collection, it's been a gateway to trade and investment, which is exactly what it was supposed to do. Those of us who've been studying global China since the early days or the years before the Belt and Road Initiative was announced may remember that those initial announcements couched lending as part of a portfolio of engagement in which infrastructure would literally lay the groundwork for deeper investment and trade ties. And that's exactly what we've seen in the China-Latin America relationship. I'll go through how that's transitioned and maybe what we might expect to see in now and in the future. So stepping back a moment, as our other speakers have said, Chinese financing to Latin America and the Caribbean did start off being tied to natural resources and infrastructure from about 2008, so several years before the BRI was announced, through about 2015, 2016, really the very first years of the BRI. What we saw were two predominant kinds of loans to Latin America and the Caribbean. General support for state-owned oil companies. Now, we heard some about Angola. That's another example of a country with a state-owned oil company that borrowed significantly from China. In the Latin American and Caribbean context, we see that in Brazil, Ecuador, and most importantly, Venezuela. This hasn't been the case since about 2016. Part of that is US sanctions on Venezuelan oil. So even Venezuelan oil that's going to China has to be refined in the US. Those are the only refineries in the world that can handle Venezuelan very heavy crude, meaning that US sanctions on Venezuelan oil effectively cut off Venezuelan exports to the world. And so there just haven't been those kinds of loans for oil, but not only in Venezuela, but also Ecuador and Brazil. Chinese imports of Latin American and Caribbean crude has essentially been plateaued since about 2017. And those are direct shipments, so that's not even talking about the Venezuelan crude going through US refineries. China's simply not that interested in buying Latin American oil anymore, in growing that as an importing source. And so loans for oil haven't been that important in the relationship. The other major kind of lending that really characterized those early years was major infrastructure packages, be it mega projects, individual mega projects like Ecuador's Coca-Cola Sinclair Hydro Dam, or master facility agreements under which many different infrastructure projects might fit. Again, with, as Christiane said, China saying, we're not really interested in overseeing how you're spending the money or the worthiness or environmental and social risks of each individual project. As long as we get repaid, we trust you to use the money however you see fit. Neither of those has continued. That kind of infrastructure lending, we also haven't seen it. What's happened to that is largely what's happened to large infrastructure projects in the region, regardless of who's financing them. It's not a China situation, it's a mega projects in Latin America situation. And here I'll add the context that immediately before China was lending for infrastructure, China's not the first to do this, right? Who was it before China? Before China, it was Brazil. Brazil's National Development Bank, BNDES, was a major infrastructure lender in its neighboring countries to use Brazilian contractors in a very similar way to how Exim Bank or CDB might do it. That unfortunately devolved into a continent-wide corruption scandal, the Lava Jato or car wash scandal, which took down a generation of political leaders across the continent. We very fortunately have not seen that happen with Chinese infrastructure lending in the region. We have not seen another continent-wide corruption scandal, in part because there's now a culture of not tolerating that nonsense quite as much, and also because well, frankly, Peru recently built a jail for its former presidents, specifically for its former president. So there's been a real reckoning about the importance of corruption control, the importance of transparency. Again, this is a region with some of the world's highest and most ambitious environmental and social governance policies on the books. So what communities expect, what rights are guarantees in the books, have improved dramatically over the course of time that China has been active in the region. And so we have another generation of infrastructure lending, this time from China, not from Brazil. And on net, it hasn't fallen prey to the same level of scandal or the same level of corruption that Brazilian lending fell prey to. However, we still see China pulling back from that because we still see China not having had its own internal environmental and social due diligence processes to avoid lending to projects that will be suspended or canceled because of protests, because communities do have expectations of certain performances now, because these environmental and social protections have become so ambitious, some of the most advanced in the world, and China didn't have the due diligence to make sure that their projects were meeting those standards. And so instead, what do we see in exchange? Since about 2017, 2018, Chinese lending to the region has not only been smaller, but it has changed in focus much, as we've heard from Sheng and Christian, more funneling through local state-owned banks. It used to be about before most recent leadership changes at the Inter-American Development Bank, China had infrastructure. Chexim had infrastructure facilities through the Inter-American Development Bank for Latin America. Those have not been kept up under recent IDB leadership. Instead, Chexim and CDB are lending directly to Brazil's National Development Bank, which of course lends regionally, although it hasn't done that since, it hasn't been lending regionally since the car wash corruption scandal. So for lending domestically, again, shifting some risk onto those intermediaries, but also relying on the local know-how of the intermediaries who have a long history of learning, sometimes by trial and error, of how to do business effectively in the region. At the same time, I do want to give credit where it's due to the fact that since 2020, China has undergone tremendous improvements in its own scale of ambition for the upstream due diligence for project approval. The green finance guidelines that came out in 2022 are by far the most ambitious reforms that we've seen within China to lay the groundwork to better evaluate lending that goes overseas. These guidelines specifically say that all Chinese lenders need to have in-house mechanisms for community consultation, need to have grievance mechanisms for affected communities. These are some of the most, these were reach goals a decade ago. This seemed, I don't want to say unrealistic, but certainly extremely ambitious given that these institutions tend to be very new in operating in the Latin American context. And so requiring community consultation and grievance mechanisms is a tall ask. So it's not surprising that during this era of figuring out how to incorporate environmental and social due diligence internally, China would prefer to lend to local state-owned banks who can intermediate, who know the local area well enough, who can avoid lending to projects that are not going to be popular, may end up being suspended or canceled because of an inability to have all of those risks taken into account within the Chinese institutions. So these are not surprising changes. But I also want to really emphasize the fact that while Chinese development finance to Latin America and the Caribbean has declined dramatically since about 2015, 2016, and now we're only seeing a few $1 billion a year. So far this year, we've seen about $2.5 billion in commitments made. We've seen a concomitant increase in FDI. We've seen a concomitant increase in Chinese contracts for infrastructure that it's not backed by lending. And this is exactly what we'd expect to see from a maturing relationship. As Chinese firms get more experience operating in the region, understanding the risks implicit in different kinds of projects, they're willing to take on longer term project risk, the project risk that comes with some owning the equity of the project itself, or even initiating a project to begin with. We're seeing more and more of that, which is completely normal for a maturing relationship. We're also seeing countries that don't need to take on debt for infrastructure, who have the other sources of financing for it, are able to simply include Chinese firms in their infrastructure bidding. And so in the last few years, we've seen Colombia and Mexico, countries that don't need to take on sovereign debt for infrastructure, simply including Chinese firms in their open bids for infrastructure contracts, and those firms sometimes winning those bids, because that's how open, transparent, non-discriminatory capitalism works. And what we're seeing is a completely normal maturing of the relationship, which is a good thing. Not only does this signal learning, but it also means that countries that have either legal limits on debt or simply don't have the political culture of taking on debt for infrastructure. Maybe they prefer to have it developed through foreign direct investment. They don't mind foreign corporations owning their infrastructure, but they don't want debt. Or countries that simply don't need to take on the debt. We see them being able to take advantage of China's cost and speed advantages. So this is a good thing for the region. It's a good thing for the relationship to have it diversify away from simply debt to other forms of economic engagement. There's one last thing I want to mention, which we don't consider development finance, but is important to track in economic engagement, and that is currency swaps. Currency swaps don't get included in long-term debt because they're short-term arrangements. They're monetary stability currency arrangements. They allow for trade and debt payments to continue when US dollars are in short supply. These have skyrocketed globally since the pandemic as the US dollar has become scarce and very, very expensive globally. Countries all over the world are increasing their currency swaps with China or anyone else they can get currency swaps with. The 6 top central banks have unlimited currency swaps among themselves so that trade between Europe, Japan, the US, for example, doesn't slow down when dollars are hard to find, but they don't extend those arrangements to developing countries. So what do developing countries do just to be able to import day-to-day stuff? They need currency swaps to be able to get a hold of other currencies to do the swap, to do the trade, and then swap back immediately. So we don't consider this development finance because it doesn't go to long-term development projects. It doesn't go to long-term solvency of the government. It's a monetary stability arrangement that can only last up to, well, it used to be 6 months. But as I've said, the use of these has really skyrocketed since the pandemic, and now they can be up to 2 years. But they're still relatively short-term arrangements that are just meant to smooth out global finance to prevent financial crises. But they're not meant to support, they're not a fiscal arrangement, they're a monetary arrangement. They're a short-term arrangement between central banks just to keep business going. Those have become very, very important globally, as well as within Latin America and the Caribbean. And again, this is a good thing, I think, as a development economist, in that in an era of extremely scarce and expensive US dollars, in order to prevent broad financial crises, we need a varied global financial safety net, including the IMF, including currency swaps, in order to be able to simply not trip and fall as a financial system every time something's in the road. So again, a maturing relationship, what we would expect. I don't see major warning signs regarding debt. The only country in the region who owes more than 5% of its GDP to China is Suriname, and it's not the top source of finance to Suriname. That would be MDBs and bondholders, as Christian said. Bilateral debt is just not that important in the region. And so I'm not as concerned as about bilateral debt per se, so much as watching how the relationship diversifies and expands.
Wonderful. I wanted to ask a little bit about this idea of the maturing relationship and China taking on perhaps a different economic role vis-a-vis these countries. Is it really seen as a more diverse source of various economic tools now, or is China having to fight that narrative, or is it just kind of people in the economic world and financial and monetary world know that this is happening, but it hasn't really trickled down to local communities? You know, you were talking a little bit about those new due diligence guidelines, and I was thinking, well, that seems pretty recent. Do we know anything about how they're being implemented right now? Are they being successful? Do people even know that that's necessarily from a Chinese project if it's going through an intermediary? So it's a little bit of like, how is China managing its perception in these countries? And does it care about kind of the channels of perception or who the different audiences are?
Well, just as Africa is a widely varied continent, so is Latin America and the Caribbean. And so we can't necessarily think about how China is perceived across the entire continent as a monolith. But if we think about countries such as Mexico, Colombia, Chile, these are countries that have engaged with China more through investment and trade than through finance traditionally. And in these countries, China is one more of a diversified set of actors that can be included in infrastructure bids, can be included in investment bids when shopping around for firms that might be interested in investment. And so, for example, in Peru, there's been significant media attention in the US given to COSCO's new megaport outside of Lima in Shanghai. Peru has been seeking investment for this project for many years. Peru is the most westward point along the Pacific coast of South America for a trans-Pacific shipping route. Peru has been putting itself forth as a logical point of exit for commodities from South America for many years. US firms weren't particularly interested in participating in the bid for that project or taking up interest in that because there's already US ports in Peru. And so rather than China being the only actor with whom to work, China was perhaps the only actor particularly interested in this project because US firms were already involved in the region in the same sector. So again, we're seeing mostly a diversification of partnerships, which is normal and not surprising. In other contexts, it's different. In other contexts where countries have certain goals that only China is interested in meeting, and here I will refer to Bolivia, which is the poorest country in continental South America, has the world's largest resources of lithium, but no technology with which to extract it, and not even the infrastructure necessary to get to those deposits. Its requirements, because of the long history of social conflict within Bolivia related to how money from natural resources was spent, it needed politically, in order to do this in a viable way, needed to have its state-owned enterprise have a 51% of a JV with any foreign investor who was going to do this. And that needed to include industrialization within the country in order for it to be politically feasible, simply because of the history of social conflict related to natural gas and other minerals in the region. China's the only, there were a few other investors from a few other regions, including one from the US, who participated in that bid, but really only a Chinese firm like CATL who won that bid, who really bring all of the potential, the technology, and the patience to work with a very low technology, lower income country for the long period of time it's going to take. So there, we're not talking so much of a diversification, even though the country did open it to a global bid, where everybody kind of knew it was going to be China who was going to help out. So because nobody else really has the wherewithal to work with that kind of patient capital, that kind of bringing its own technology, understanding it won't be profitable for a while. That kind of perspective, that kind of approach is a unique advantage that China brings.
Wonderful. I want to remind our audience that if you have any questions for our panelists, please submit them through the Q&A question. I'm going to start wrapping up my own questions, but in the meantime, I want to bring Shenjiang back in. We heard from Rebecca and Christian about regional expertise in Africa and Latin America, but this is about other parts of the global south as well, and there are kind of similar patterns and also some differences. What about other parts of the global south? What is the regional distribution of lending that China is doing closer to the periphery, across Asia, elsewhere? Can you give us some insight into kind of where China's money is going regionally in this kind of, ill-fitting monolith of the global south?
Yeah, this is another great question, and also echoing to what the other panelists just said. It goes to the most biggest recipient in the early years, such as Russia, such as Angola, and then later in the years with the instruments of financing shifting over the years from for example, like a more heavily involving infrastructure to more like the soft money in on lending to commercial banks, banking and financial services. We do see some other countries popping up, such as Argentina, such as Egypt, such as Pakistan. Different things has been mentioned on different initiatives under different countries. Like Rebecca just said, different country has their own, for example, requirements in order to make some lendings and investment even to be politically feasible. And I think that attributes also, shifting sort of the financing over the years in order to have some countries popping up as a top recipient instead of, has been Russia being top number one all the time. It's sort of like moving across years for the countries to be pop up receiving different kinds of instruments going into different industries. And, echoing what Christian just said about, critical minerals in Africa, there was some like heavily involved like energy sectors, like huge projects, mines, copper, cobalt, or nickel being committed in different countries in Africa. Things like that also happening in Latin America. I'm pretty sure Rebecca also mentioned that. And similar things, like coal-fired hydropower stations and all of that also committed in Asia when there are sort of a shortage of, electricity. You have also seen the demands being raised from the receiving countries and being answered and addressed from the donor side in order to meet those demands. So countries like, Pakistan has a significant amount of coal-fired power plants being committed, and over the years to sort of made up the electricity shortage in the country. But there's a lot of different scenarios based on different variety of the countries that sort of change the kind of the shifting of financing and lending over the time.
Great. I have a question for all three of you, and so feel free to jump in whatever order you want. But I wanted to bring up a quote that a Chinese official made recently, and committing the big announcement saying we must proactively shoulder the historical responsibilities of safeguarding the common interests of the global South countries, promoting the development of international order toward a more just and equitable direction. This is a pretty common declaration now from Beijing. It kind of lumps all global South countries together. And as we've heard, not only do different regions have different priorities, but also different countries even within those regions, right? So how much does a statement like this ring true to partners in the global South? I mean, China is a major overseas lender now, and even though we've talked about all the different ways it's diversified, when China makes, this kind of PR move, is it believed? Do people care if it's true? What's some of the context on this? And whoever wants to start first, just by all means chime in. No takers.
I can pop in, although I'm very eager, particularly to hear what Christian has to say about this.
Go ahead.
But PR is one thing and business is another thing. I think in the countries that have the strongest trade relationships and investment relationships with China within the Latin American and Caribbean region, there's an understanding that rhetoric is going to be hyperbolic, and it's just not that important. At the end of the day, business is business. And being able to do business with a broader array of partners is good for the stability of the region and simply to get better deals on infrastructure or investment bids. So it's just not that big a deal. There have been in the past, and here I'll bring up specifically the example of Argentina, where President Milei came into power on China skeptic rhetoric, specifically saying he no longer wanted to maintain certain deals with China. And he's in Beijing at the moment for the China CELAC summit. And he renewed the currency swap with China because rhetoric is one thing and business is another. And the same thing was true under a former President Bolsonaro in Brazil, who came into power on a China skeptic rhetoric. But as soon as he came into power, he sent his agricultural minister to a trade show in China because his most important political base were agricultural producers. And where do they send their products? They send their products to China. So rhetoric is one thing, business is another. Regardless of what the politicians will say, the business people will continue to do business with each other, and having more people to do business with is a very important part of the economic stability of the global South, to not be so tied to the ups and downs of one partner, but to be tied to the ups and downs of multiple partners, which may not sync with each other. So when one country is not doing so well, another country may be doing better. And so if you're exporting to both of those countries, you have something of a safety net there. As commodity exporters who traditionally depend on these very volatile markets, any stability that can come in through diversification is helpful.
So yeah, she really made a good point, and just to in the case of Africa, it's really interesting because you'll be surprised how much China is not really part of a public debate per se in Africa in terms of like how China is landing in Africa. It really becomes part of the public debate when it's coming from external media, you know, when they talk about it. But internally, it's not really something that people talk about because surprisingly, except for countries like Kenya or Nigeria, where you really have debates going on, or how the money is spent, how we are servicing, how much money are we servicing to public debt, you're going to be surprised that in many countries in Africa, it's not public debt and how much we owe is not really part of the debate. We had that in the early 2000s where we were talking about the IMF initiative on a highly impoverished country. We were talking about that. But once we pass that, it's not really become something that people really are scrutinized, paying attention to know that how much money are we spending that. So that's why, in a sense, like when China is making that kind of statement, it doesn't it doesn't really become part of the debate, the general debate in society. Say, are we paying attention to that? Do we really think that it's really taken seriously or not? But it's really just resonating among, you know, leaders and thought leaders and intellectuals to say, you know what, China is making a certain sense when he said that we need a different approach to that because historically speaking, we had much more problem with our bondholders seizing assets elsewhere in different countries, seizing our planes. That we still remember the vulture the vulture fund that we used to have in the 90s, that where people will be selling their loans to a vulture capitals, and the next day you have your embassy seized, you have your plane seized, you have your infrastructure in different, you have your boats seized in different parts of the world. So people still remember that. That's why when it was portraying about what China is doing, people were mirroring that China would be doing what we used to see with vulture capitals, which we didn't see so far. We haven't seen that happening. So it's really not part of the debate, but it's going to resonate in people's minds as saying that, yes, a different internal system, we approach that, the way we approach that, the way we approach, and you know what we used to have right now.
Both panelists, you know, said like really great points about like different perspectives. I'm probably just gonna add a little bit here. You know, this reminds me of during the COVID days when I was, you know, read on the news, I saw photos of the cargo planes dropping off COVID aid with, you know, the China aid logo there. Well, there was like a campaign, you can say it's PR, right? It's trying to fix the international reputation. It's trying to balance the sentiment against China during those period. But those cargo planes delivered. It arrived at the capital. You see the local officials showed up at the airport. They shake hands. They offload the cargo. The plane fly back. and it goes to different countries with the same logo. You could see that as PR, you could regard it as a campaign, but it delivered. So that's sort of echoing on, as of the development finance perspective, well, those statements has been made. You do see those projects being delivered. Are all of those perfect? Probably not. There may be some default, there may be some country paying penalty interest. Well, there are issues on different projects, but it happens to everyone. Like, Christine said, there are more issues for multilateral like organization in the previous years, and there are issue with Western commercial banks on infrastructures. So the thing is, statement like this has been made, but people cares in the long term on whether things has been delivered and what are the other options on the table. I think that's more important for the receiving countries.
And you bring up such a good point that I wanted to ask about as well, and that is that this pattern of lending, of course, started even before BRI. It was 走出去, which is to the China go out policy, and that was a lot of alleviating domestic overcapacity, which kind of kickstarted all of this as in certain industries in particular. But over time, it was kind of splitting this role of being an aid provider as well as a loan or a loaner or a creditor, a lender, I should say. And so I'm curious, now that China has actually created an aid agency, how does it live as a vehicle among all of these other lending instruments? And I I don't know how to really unpack that because it's still a murky area, and Chinese aid doesn't fit under OECD standards. And so how does that live alongside the fact that China is partnering so much more with other multilateral development banks in terms of trying to diversify in the way that it does its loans for the global south, and probably elsewhere in general, but primarily to the global south?
I'm gonna
Anybody
add.
want?
I-
Yeah.
I'm gonna say something here. I do believe that we may see that agency or the China Development Agency really taking much a bigger role, but I do not see that becoming as big as that we see in terms of OCD, in terms of development aid, for only one for philosophical reason first, in a way that China approach relation to other countries in terms of money, in terms of assistance, is not the same way than other countries. That's why we see when you look at ODAs in terms of numbers, China ODAs are quite very low, and when you compare to OOF, China OOF are really high because the way they approach aid is really not the same way. I do believe it's much more a very philosophical, more than financing element. It's really more cultural to say we don't do things like this. We don't do aid like this. We're not going to help you by keeping you poor. We're going to help you by giving you the money for you to build your own resilience and for you to being able to move forward. Where in I think Western world would be like, you don't have that. We're going to give you money and hoping that we're gonna keep on giving you money, which China doesn't have in terms of philosophy. So as much as I see those agencies taking a bigger role, but I don't see them shifting the way China is lending or is approaching financing assistance to the global South country, because I think there is a deep philosophical difference in terms of how to see and how to approach money and help and assistance to people who needs money.
I think that's spot on. As far back as my undergraduate, which is many years ago now, but I wrote my undergraduate thesis that was all about this rise of Chinese aid, and I titled it "Development as Ideology." And I think that kind of fits in the kind of conceptual framework that China has for how it engages with other developing countries, because it very much adopts the position that it is one among all of these. And just because it has resources means that it will take on a different role in that relationship, but it is not fundamentally changing kind of the lens through which it views how financing and development should be done. Um, I wanted to bring up, Rebecca, you mentioned the China CELAC forum happening in Beijing. Apparently there are something like 100 representatives from 30 different countries. But it's not the only type of forum that exists like this. China has FOCAC. There are other small regional groupings, not so small anymore, but some have had more success than others. I'd say FOCAC and CELAC are kind of the ones still kicking with the most vibrato behind them. But there's also been the BRI forums. I'm curious how significant these are. How do they factor into China's relationship to development finance? Is it again just another kind of sideline, high profile event? Or is it a way that business really does get done at some of these higher profile things? And so I'll kind of ask all three of you, but I'll start with you, Rebecca.
This has really changed over the last 15 years in the same way that China's relationship with the LAC region has shifted from being primarily sovereign finance to now one really that includes a lot of investment as well as direct infrastructure contracts, as well as trade in goods. The China CELAC Forum has evolved with that. In the early years of the China CELAC Forum, it was very normal to, at the end of the forum, everyone would pay attention to, well, how much money got committed this time? How many billions of dollars is China saying that it will invest in development finance, specifically for infrastructure projects? The last China CELAC Forum that happened, there were some high-level agreements about technology sharing and scientific cooperation, and it felt much more like it felt much more like any other regional forum like you might have with APEC, or you might have with any other regional forum where countries simply look at their future portfolios of interests and say, yes, there are some areas in which we can collaborate, and we'll sign some MOUs that say that our ministries will talk to each other more. And that's great. That's fine. But it's not, because sovereign finance is not the center of the relationship anymore. We expect that the dialogue will also shift, right? And so this is really the third major opportunity that China and many South American countries have had in significant regional fora just in the last month, because APEC happened in Peru, and then the G20 happened in Brazil. And so for the higher income countries that are on the Pacific coast, Colombia, Peru, for example, they've been a part of all three of these. And so this is much more a forum among friends, a forum among colleagues or business partners, and less what we saw at the beginning, which was China coming with a checkbook and countries coming, finance ministries showing up with their portfolios of projects, some of which may have been dusted off from generations before of when they tried to get these projects through the World Bank and the World Bank didn't say yes. Now it's not, oh, China has a checkbook, what can we bring to China as our wish list? Now it's, okay, we're all kind of peers as middle income countries thinking about our policy agendas and where we align. So fewer big number headlines, but again, a maturing relationship, what we would expect to see.
I think it's the same thing that we see with FOCAC in Africa, but in Africa, different to Latin America, we didn't see that maturing from African countries in a sense where you can clearly see that China is shifting FOCAC from an economic entity to a much more political, ideological forum to engage formally with Africa on the long-term perspective in terms of global governance than what am I bringing on the table? I wrote an article recently of mentioning it's a mistake to keep on evaluating China's influence relation in Africa with like how much money came out of FOCAC. You are missing the point. You are really missing the point on how China is now moving on the continent and how China say, you know what, I want to engage in much more longer term perspective relation where I'm going to have small impact on small places, but when you compound all of them together, the impact is much greater, is much bigger than me telling you I'm going to give $75 billion. So when people are stopping on that, they're not really paying attention to those small projects, vocational training here and there, agricultural projects here and there, medicines here and there, hospital here and there. All those projects are building China reputation, because this is also one of the points that we're missing, how China is now really learning to say, you know what, I want to build my reputation, because you cannot want to become a greater power if you do not have a kind of soft power coming from really on the grassroots, where people say, you know what, this is coming from China. This has built. And this is the part where I say people should not be paying at by looking at 51 billion. It means nothing. The forecast, the wording, how China is portraying it, and where China is going to move with that. And this is why I do believe that in Latin America, as Rebecca said, countries have been maturing, learning that, you know what, it's now a group of friends. We can now learn to work together and how to work, to move, to make things happen together. But in Africa, this is the sad part where I say that is the fact that you don't see and you don't perceive that there is an understanding that we need to shift our way to see and to approach China. Head of state, ministers always go to China and to go big forums, just like kids. I have a project. Can you give me 10 billion? Can you give me? And you want to tell people, you know what? China's moved on. China's moved on those. You have to understand. And people are telling me, you know what? But China promised to give $1 billion to Tazara. I say the difference with Tazara Tanzania is only the geopolitical element because of the lobbying on the other side. You remove that element on the geopolitical element on the table, you're gonna find nowhere where China say I'm putting $1 billion for infrastructure. They don't do that anymore, but they're gonna be willing to put 350 million to a data center somewhere, 200 million, something like that. But since those projects, they do not carry the same political weight for leaders on the ground, they don't always talk about them, and they don't use them as political currency. So people don't always talk about those projects as well. But in fact, they really have a much more greater impact, because when you compound them on the larger scale, you're going to see the impact as really different.
I just want to add that I think this is also kind of the witness of the shifting in the political kind of orientation of building up the alliance and partnership with the Global South. As Eleanor, you mentioned earlier about the going out strategy, I find it very interesting because I personally saw the website probably back in like 2008 from those like little provinces in China. The different provinces have those going out website. They put up the small sort of factory and business in China. They're trying to build up opportunity in thousands of miles in different continents and starting to build a connection with them. And now we are talking about the elite to elite, the high level summit. And now you're looking at the newly founded or like repolished agency that handling everything. I think it's about better regulation, better governance, and then building up this partnership and alliance they kept mentioning on different occasions, and trying to form this new relationship and carry it out on the second, maybe people would call it like BRI 3.0 or something, to carry in the future.
That's great. I don't have any other cues in the questions, but I wanted to just ask a concluding question. I'm just thinking about China's role as a lender and as it's evolved. Do you have any final remarks, anything that's a misconception that you want to dispel, or something that actually, sorry, there'll be a question right after this. So I'll start with this concluding question, and finally we have some questions coming in. But yeah, just kind of thinking about how to think about this in a more nuanced, diversified way. I think that today's conversation has been really helpful, but anything that has been left out that you would like to include. So I'll start with Sheng first, and then we'll go back around.
Well, this has been great. I really appreciate all the comments from Eleanor, from Christine, from Rebecca, and I think what cannot be ignored is also the domestic pressure, which is facing right now inside of China. It's going to have an impact. It is going to have an impact, which I'm, again, like a data nerd, so I can't speak really on that because I don't have enough data points in order to generate like a real analysis on what the impact will be. But I think the time will review the reality. Sit tight, we'll see things shifting even more sort of from the data point side. But again, really appreciate the opportunity being here.
Great. Rebecca? Oh, sorry, go ahead, Christian. Go ahead.
No, my comment will be, I think I've mentioned it in my opening remark, is that we need to move from the ideology perspective on how we look China, how the China engage in the global south, to move from much more factual elements, in a sense where when you move from the ideological will be like, we already have a conclusion. China is bad and China is evil and China is trying to hurt people. So we look everything through that spectrum. That's why when you see bad lending, bad loans, you can say that no, that was the intention they had. And when now you see them changing the gears, you don't understand why they're changing the gears. Because at the end, you already had the conclusion this country was evil and everything that was doing was evil. Not paying attention that when you put on the larger spectrum of every big developed country made the exact same mistake at some point in time in terms of lending, in terms of loans. So when you understand that, you now understand that no, it was just a learning curve. That most of the time, as much as we do have greedy entrepreneurs and much as we have corrupted officials, but on a larger scale of things, it was much more about a country that just was learning. I'm going out, I have money, I need to develop my country. How do I do that? I'm just learning on how to approach it. And in that learning, I've made mistakes, I've empowered people who were not qualified because they did not have the expertise to do that. They've made those mistakes in extending those loans, but now I've learned, now it's different. And this is the part I say, when you move from the ideological angle of the debate, you're going to see things much more differently and you're going to learn better on how to engage in a constructive way with China in the global south.
Wonderful. Before we turn to Rebecca, I just want to kind of capitalize on this moment with Christian and answer one of our audience's questions. And the question is, does China fear the U.S. effort in the Libido corridor in terms of potentially upending Chinese lending practices in Africa, or are the Chinese fearful that African countries might move to a U.S. approach towards lending? I think you tackled this a little bit, but can you elaborate a little bit on that?
There's no much of a fear that from Chinese. I'm doing a research now of comparing the Lobito and the Tazara. I've been speaking to Chinese stakeholders and Chinese mining companies. They say we don't have nothing to fear, just the railways. I say we're gonna use it as much as they allow us, they would like us to use. We're gonna use it because from a business perspective, the Trafigura company consortium has every interest for us using it because we are the biggest stakeholders in the region. If we don't use them, they don't make money. They need to make money to be able to pay back, because what we don't understand, the 500 million the US give is the loan. It's not a gift. So we're gonna have Trafigura's gonna have to pay it back. For it to pay it back, they need the railroad to be viable, to be used. So we're gonna use them. So for Chinese companies, there's no worry, there's no worriness about that. As in terms of like how to approach it, how are they fearful about Africa moving? They're not really fearful in a sense where the reality is the US doesn't really have much more, doesn't have a lot to offer, it doesn't have a lot to offer on the table in a way that something substantial. Because when you look at the US industrial complex and stakeholders, they all fear Africa. They only stick to countries like South Africa, Egypt, and the whole sub-Saharan Africa is like a no-go zone, too much risk, too much this. That's why Biden can say something, the State Department can say something, but African leaders know ultimately Biden and the State Department won't have any power to compel any private American companies to invest in a country where they do believe that it's a risk country. So this is the part where China knows that we are willing to take the risk in those space that many countries in the global north are not willing to take, because they don't want to take, they don't want to learn, they don't want to take the risk of learning that. So at the end, there's no really fear. They understand the need for country to diversify, because themselves as well, they diversify the way they relate with Africa. They understand that there's no need to fear of that. They just say, okay, we're going to adapt to the new environment. So yes, I think this is the point I would like to make regarding that question.
Yeah. Certainly. And in many ways, it sounds like this Libido corridor will end up in many ways being a complement to other Chinese investments that are already there. So if by all means, let other investors come in and do other projects, and then we can all benefit from it, right? This is kind of the Chinese thinking anyways. Want to turn to Rebecca to have the final word on the floor in terms of thinking about this broader conversation about Chinese lending to the global south and to Latin America, and what we should kind of take away from this conversation and keep in mind.
I'm so glad you asked this question at the end, to think about how we can broaden our perspective or challenge some of the conceptions that we bring to the discussion. I think that one misconception I find frequently is a misunderstanding of the incentives of the different decision makers involved. So when I get to interface with policymakers from North Atlantic countries like my own, like the US, as well as Europe, I frequently hear references to the global South as something to be won or lost, as if it were a passive fairy tale princess in a tower waiting for one knight to come along and slay a dragon and win their heart. And it's simply a misunderstanding of the fact that developing countries have trade ministers who want to do business with everyone. They have infrastructure and investment promotion agencies who want to take bids from everyone. And maybe they have finance ministries who are looking for a way to take advantage of different advantages that different partners have, always trying to balance relationships for their own goals, not choosing to align themselves necessarily with one external partner, because aligning yourself with one external partner is a recipe for economic fragility, because you are then tied to one economic partner's ups and downs. And so recognizing that external partners can win or lose particular bids on particular projects. They may not bid on certain projects and miss the entire opportunity, as with the Chancay Megaport in Peru, simply because it didn't fit the interests of foreign investors in the US at the time. It may also be that when we look at Chinese infrastructure, FDI in the region, which has really been the driver of investment in South America for several years, this has come because Western investors sold out of the region during the years immediately before COVID as the region's economic growth prospects slowed. Infrastructure pays off very slowly and electricity is very highly correlated with economic growth. So if your growth will slow, your electricity usage will slow. The equity stakes in those investment assets in the networks simply aren't going to pay off as quickly. Western firms sold out of the electrical grids in South America simply because their incentives were different from Chinese state-owned enterprises who were happy to ride out the ups and downs because they don't have quarterly profit targets. They have 5-year plans. And so in different contexts, different partners will have the advantage. The challenge for Latin American finance ministries, for their planning agencies, for their investment promotion agencies, is how to balance all of those relationships for the best possible outcomes for their people, rather than simply choosing one external friend to ally with. And so I would encourage, whether we're scholars, or policymakers, civil society members, to consider the individual decision makers involved in all of the aspects of these relationships and recognize that while external partners may have broad geopolitical ambitions, host country actors have very specific growth targets. They have very specific living standards targets. And if you're not taking those into account, then you're not really understanding what your partner needs from you. Thanks.
Wonderful. Yes, I think that's a great conclusion. And of course, the Chinese side, in terms of the actors who are doing the projects and the investing, also come with their own slew of incentive structures. So the world of development finance is clearly a delicate dance that we all need to try and understand a little bit more. But Rebecca, Shen, Christian, I want to thank you all so much for today's conversation, and thank you to our audience as well. Thank you so much.